Okay, so today is the 10th of April. We're just doing this podcast on Friday, just as the market is closed in the US. Um, the changes in the market for the week. Um, there was actually quite a large drop in oil, as you can see on the screen. But just if you look at the S&P, it's up 3.5%. Nearly oil was nearly down 13%. Gold took a bit again at 1.56. The interest rates were pretty much unchanged. They're up 6 basis points, so 0.06%. And Puma, which is the shares that John and Jeff are looking at, they're up 11% from last week. And Iberdrola is unchanged. We had it at 20.3 last week and it's 20.3 today. So I guess the first thing we'll do is just have a quick chat about what the market did during the week. So if John, do you want to take that or anyone?
Yeah, just very briefly. The market is hanging on to every word Donald Trump says and what's going on in the Middle East. On the 8th, there was an announcement of a ceasefire. Oil dropped pretty much instantly 15%. Markets were up 5%. DAX was the outperformer. Germany's the market which has been off the most on the back of this crisis, and now it's jumped the most. Uh,
Why is that? Are the Germans obviously more dependent on oil than any other country in Europe? Is it?
yeah, I think it's also to do with the makeup of the DAX.
Okay.
And you know, oil has a bigger,
I think Siemens jumped a lot as well, didn't it? That's probably a huge big
yeah,
component.
yeah. Some companies, when the price of oil goes up, price of shares goes down generally. But there are exceptions to that. If you look at the FTSE, it's got oil and commodity companies within it, and they actually respond in the same direction. The price of oil goes up, those stocks go up as well, which prevents the FTSE sinking as much as other indices in times like this.
I think the
And
FTSE is
again,
it's approximately 10% oil with BP and Shell, obviously the big ones.
yeah.
As far as I know, it's about 10%. I'll double check that for next week.
So that's pretty much it for the week. And again, we're all in tenterhooks because we're waiting to see, does the ceasefire hold? If the ceasefire fails, it'll be very hard to get it back on track, most likely. Israel continue to bomb Lebanon, which is a bit of a problem. It's like I don't know what's going on with them. Uh, and that seems to be the thing that's most likely to break the ceasefire. It seems like the Iranians want the ceasefire to hold, the Americans want it to, are desperate for it to hold. Obviously, Europe wants no part of it, but Israel seems to be taking this opportunity to, I don't know, settle old scores. Maybe I don't know what you want to call it.
I think, as far as I know, that there's a might be a little bit of a misinterpretation whether Lebanon was part of the deal or not. The Pakistani ambassador said, or the Pakistani envoy was under the impression that Lebanon was part of it. Israel was under the impression that's not. So the talks are due.
And who are you going to believe?
I don't. I don't
Yeah.
know.
I
Um,
mean, like, yeah.
what should
But
what do you think
you
of
know,
the market this week, Jeff? By the way,
So I'm away at the moment, and I've just been keeping an eye on a few things.
keeping the weather eye, yeah.
Yeah, I don't think John kind of sort of nailed it down there. Really, there's kind of it's all really based on sort of political chaos, right? Or war, and so yeah, there's a few other bits and pieces, a couple other stocks, that are looking kind of interesting, which is not really relevant to the or related to the war. So um, yeah, but it's nothing really else to add on the market, really. Just it's moving when Trump announces some idiotic kind of things, the market moves, and you know,
The
again, I
market did
don't, and I think
move. Yeah, go on. Sorry.
I don't think it's very hard to trust even what he says anyway, or like the peace deals. We've heard about all this stuff with Ukraine and peace deals and there's a lot of smoke and mirrors. There's a lot of yeah. Anyway, yeah. So the market's really just moving with
On the
this in
back of
mind.
his word. There
Yeah.
was a very it was a very interesting move in the S&P on, as John said, it was Wednesday morning our time, but I think it was probably Thursday or Tuesday night the US time, and it was it was called Taco Tuesday. Trump always, what's the C stand for? chickens out. So,
Mm.
from your experience, though, the market made like 178 point movement in the S&P, which is nearly, you're talking the guts of 3% with the actual stock market closed. So the futures market did that. Do you guys have any experience how a market behaves that has a jump that big with the cash markets closed, i.e., with the share prices closed?
Yeah, we recall we're trading when Brexit happened. The markets, the futures market was open while the cash markets were closed as a result for Brexit came through in Europe, and the markets just wildly whipsawed. And when they went down hard. Some things went down too far because the cash market wasn't there to kind of regulate it. People got stopped out of positions, and there became great opportunities to buy stuff or to sell stuff which you hadn't sold off enough. The market can make a lot of mistakes when the trading is quite thin. So it's if you have positions that you have to liquidate, it's not the time to do it. You wait for the market to stabilize and back to normal. If you're liquidating a position, it's likely other people are doing the same thing and they're pushing it too far. Or in some situations, they're liquidating things to cover other losses. So again, it's nice to not be under pressure in that situation, be able to step back and have a cool look at things and figure out where value should be.
Yeah.
Uh,
But how do you trade from experience, Jeff, where the market does make a 3% move? You've missed the buying opportunity in theory, but the buying opportunity is only futures in a very illiquid market. It's after them.
Yeah,
If
but
it's after,
I think we talked. Yeah, I think we were talking before though about if you're in stuff, it's fine, right? I mean, you're
yeah,
not shorting the market anyway. Well, I
okay,
don't.
yeah,
Like yeah, I never do. So if you're in stuff and it pops up, again, we talked about the longer term. Talked about Iberdrola last week, or the week before, I can't remember. And the whole idea, holding it for the longer term, so
yeah.
if you're either taking the short term bets and the market's popped up and maybe you're taking profit, or you've already bought it and you're looking at the long term anyway, and a move up, it doesn't really affect it, right? I mean, you
Yeah.
might wait for a while and buy more if it's longer term anyway. So
I did listen to a trader talking on a podcast. He made the huge mistake on Tuesday night of taking a guess as to what was going to happen, and his guess was that Trump was going to declare war. So he was short to the yin yang, and for want of a better
how did that
phrase,
work out for him?
it didn't work out too hot. So he had a 3% move opposite. I think he was quite leveraged. But the one lesson he was there, as I think he was emptying his pockets at the last cash he had, is that
Mm.
he's never going to preempt what any government minister is going to say.
Yeah, how can you do that? I mean, that's like John's going to
He,
toss a coin there, right? And I'm going to say, yeah, it's going to be
yeah,
heads, and I'm
yeah,
in, and
yeah,
I'm leveraged on it, and I'm
and
right,
yeah,
I mean,
and
hooray,
everyone's everyone's
That's
giving
not
out.
so that I don't think that's sorry for that. I don't think that's really trading. That's
No,
just
that's gambling.
complete speculation or whatever,
It is, yeah, yeah.
I think if you have some kind of insight into what's going to happen, then maybe it's a bit different.
Mm-hmm.
Maybe you've noticed the pattern that whenever Trump declares war on somebody, he wears a blue tie. Whenever he goes for peace, it's a red tie. If you spot
Hmm.
something like that, and you develop an edge. And again, this is not a real example, but if you do develop an edge, then you can trade news and you can preempt news. But unless you have some kind of edge, you step back, you wait for some real opportunity.
Hmm. I think I was looking at the price of volatility going into this weekend, and the VIX is quite an interesting trade. Is the price of what the future volatility of the market? Sorry, what the market volatility expectation is, and the VIX really sold off a lot this week after the Trump call.
Hmm.
So going into this weekend, I had just had a quick gander at it there, and it's just trading around 20. It was trading a high about 25 and a half, 26. So it has come off a lot, as if the market is saying, well, okay, we don't really expect many more moves. But I do know historically the VIX, I think John's around 15, 16%, is this historically?
Yeah,
So it is still high.
it's below it's. I mean, we've seen the VIX get down to 11, 12 in really quiet years,
Okay,
and
so it is high.
when the market is just drifting sideways and there's nothing going on.
Hmm.
Mm-hmm.
I think at the height of this, it was probably hit about 30, maybe was the height of the VIX over this crisis.
Yep.
and now it's come right back down to 20. Normally it peaks a little bit coming into the weekend because people are covering for the weekend, but not this time around. It seems like the market seems to be thinking, well, maybe things are going to be okay,
Yeah.
and if they're wrong, it could really blow up this time around because a lot of people are going to be offside. So
Well,
Yeah.
that's it. I don't know. Like, I mean, it's actually if you're long them, you have long positions, longer term stuff. You could go home, long a bit of the VIX as well, right? I mean, in case things blow up and you're kind of you're hedged out for a move there. But who would be going home short? Kind of going, yeah, let's come in Monday, Tuesday. It'll all be quiet and we'll just make a bit of money.
yeah,
Hmm.
Yeah,
that's something
maybe.
I
like
think
Yeah,
that.
it's
you
a
could.
yeah, it's a deadly, from experience I've learned it's a deadly trade, the VIX, to go short, unless you're hedged.
Mm.
And obviously you'd
Yeah, well, there you go. Exactly. Yeah.
yeah,
Yeah, exactly.
because it could just
Your
go in
your
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 face.
your pal your pal that made his bet that there would be a war. He could have he could have sold the VIX then as well, right? I made a lot of
Well,
money in the VIX and offset his move to
well, I
you
think
know
he'd have bought the VIX if he thought there was war, right?
no,
He
but
would
I
have,
mean
yeah.
if he put positions on
Oh,
expecting this
sorry.
war thing, he
Yeah, to
could
hedge
then have
himself.
yeah, just yeah.
But
Yeah,
but essentially he'd be taking no bet if he did that. He'd just be neutral. He'd make him one leg and losing the other leg, no matter
yeah,
what happened. So, but obviously he wanted to take a bit of a gamble. He thought he
yeah.
knew something was going to
He
happen,
certainly
and
did.
it got handed to him.
Yeah. Okay. Well, that's the lessons in preempting. Right. Well, that's the market for the week. Today we were just going to have a quick chat about gold. I don't think any of us have really traded gold, have we? As
No,
or
I've
do we
never
have it?
traded gold.
Really, no,
No.
I mean,
no,
I,
I
I,
it's
I
was.
certainly not
think I,
here.
I
No.
think when we had Blue Seal, we did a few little trades in it. Just
Mm,
punching a little bit, seeing if there's anything in it for us, but we didn't see anything there. Not in the short term. Again, we were intraday traders mostly, and we didn't spot anything too interesting for us. I think the longer term gold trade is much more interesting at the moment, and I think it's going to become even more interesting once this Gulf crisis abates.
It's
Um,
gold is actually. I was just trying to think about a few other products that do not pay any dividends at all. I no interest rate, nothing, and commodities like gold and silver are really the only two, aren't they? Well, except like for metals that are invested as opposed to used. Would that be correct? I couldn't think of any other product that doesn't pay dividends.
well,
No,
palladium, platinum, all those they're all very similar. I mean, I assume like none of those
True.
things will
Yeah.
pay dividends as such.
Yeah. Of course. Of course. But
And
as a reason to trade for your own personal portfolio, if you were to put a percent of money into gold, you are going to. It's a capital gain only. There's nothing else.
yeah, like all commodities, yeah, it's a capital gain only. So basically, commodities trading is the idea is that the product keeps track with inflation. You buy wheat, you buy soy, you buy gold, you buy oil. The price of everything goes up, the price of those things will probably go up too. So traditionally they're all kind of seen as inflation hedges,
Hmm.
and that's why people like to have a little bit of in their portfolio. And it's very liquid as well. So it's and in the times of crisis, it generally holds its own. It doesn't usually sell off.
Yeah, we had that sell off in about 2 weeks ago in gold, and the best explanation I could see for it, it had reached. I think it sold off about 10%, and people were going, "Why is gold selling off?" But I think it was for access to cash. It's as you
Yeah,
said,
I, I,
John.
I think
It's a very simple thing to just get out of. There's no messing around.
yeah. I think you're spot on there, Phil, because what happened if you look at the price of gold over the last few years, from June 2020 to Feb 2024, it basically traded around $2,000 an ounce, a troy ounce. Uh, from 2024 March to August 2025, it go around its way up to 32.50. I'll go into the reasons for that, or the supposed reasons for that. But then over the next 4 to 5 months, from August to January, August 25 to January 26, it jumped from 32.50 to 5,500.
Yeah.
And again, the traditional reason to hold gold, it's a nice stable trade,
Yeah.
keeps track of inflation, completely gone. It's a completely different product now than it was 12 months ago.
I think you're right.
And we should look at the reasons for that. That's the
Yeah,
interesting
Well,
part.
I think you could argue that I'm just thinking the reason why it's kind of elevated. I mean, you have some kind of politician in the States, right? I mean, that's bringing chaos and uncertainty to everywhere, right? So I know there's other central banks buying gold for different reasons, but when you've some kind of you have a guy like that there, you kind of elevate the fact that you want to have reserves of
Yeah.
some kind of an asset
Kind of.
reserves that you're building up, And I think
Yeah.
that's certainly pushed the price up and up and up.
Well,
I just
there's
just John, just before you go into the reasons why you think this, I just want to just tell listeners there's a sort of there's the image of that gold is going up and up and up and up and up, and so it's too late to buy and all that stuff. But just looking at the research that we did, I'll just quickly tell the listeners that in the 1980s, gold hit a high of $850 an ounce. Now that's equivalent to $3,300 an ounce in today's money value. So when people look at it trading 850 or below that, famously Gordon Brown sold, I think he sold all the Bank of England gold around 252 or $250
that's
per
right. Yeah.
ounce, in which is possibly one of the worst gold trades ever done by him, one of the best gold trades by whoever bought it off him. But I just want people to understand that the high of gold in the 80s is equivalent to about 3,300 now. So that's even below, as you said, John, when the 2020 value was 2,000. It
Yeah.
was still relatively cheap to today's value. So I just want to explain that before you actually give your reasons. So far ahead, man. Far ahead.
Yeah. Okay. Well, what has been happening is that gold, the price of first of all, we have to look at the drivers of the price of gold, and it's supply and demand. Uh, just on the demand side, about 15% of gold is used for industrial or medical use, and it's used in data centers, and that demand is consistent and it's not sensitive to price. The 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 cost of these AI data center build outs is astronomical, and gold is only a tiny part of it. So if it goes up to $10,000 an ounce, that demand from that sector will still be there. And that's about 15% of the yearly production. Yearly production is just over 3,000 tons a year.
Really? So
And
so they'll just pay for it because it's such a small part of the whole process.
they
They'll
need it.
just pay. They just need it. Wow. Okay.
Yeah, exactly. The second thing which the second thing which sorry for the second thing which I think is probably more important is central banks. Now you talked about Gordon Brown when he came to the market and dumped the UK gold reserve in 99 2000. It
Sorry,
just
is that
collapsed the
John or
price.
is that me? Can you hear John clearly,
I
Phil?
can
Yeah, I can hear him. Yeah.
I can hear you, Jeff, but
Oh,
you're not
sorry.
really moving.
Okay, sorry, it must be me. Sorry. Okay.
Okay.
You have.
So what you mentioned before about Gordon Brown dumping the British Reserve and basically single-handedly collapsing the price of gold, it seems at the moment the Bank of China and the Bank of India are increasing their gold stock. India is the single biggest purchaser of gold in the world for jewelry reasons, but China and India have indicated that they're not really happy with being totally linked to the dollar, like the renminbi and the rupee. They're trying to diversify, they call it a little bit. But and this seems quite understandable in light of US foreign policy, and it seems to make sense that they don't want to be dictated to by the US as to what to do and have their currency dependent on the US. So the logical thing to do is diversify into euros, diversify into other assets, and gold seems to be quite a good candidate. Easy enough to store. A small amount is a huge value, and the actual ownership. Again, I have some stats here.
Just be,
India's
just before you go into the stats, are you talking about the government doing things, or because I do know the Indians have a love of gold, the people do. Okay.
yeah,
In terms of like jewelry, and since you have a very high rising middle class in India, which is just beginning over the past 10 years, that middle class is going to buy more gold jewelry. There's no doubt about it.
absolutely, yeah. And that's
Okay.
that's a huge part of it because 50% of gold is used to make jewelry.
Oh,
And
okay. And
again,
so,
the Indians are the single largest. They purchase 20 again largest purchase of gold jewelries. They account for 25 to 30% of all global demand
well,
for gold jewelry in
so
India. And the wealthier it becomes, this is what they do. Yeah, definitely.
very good. So,
But the other point I was sorry.
the Chinese though, that's more government though, is it? That's not the people.
No, it's
Or
both actually.
okay,
It's
right.
they're just China is now the second largest consumer of gold for jewelry. It was the highest. India's overtaken it, and
Oh,
again, that's most likely to do with the rising middle classes in India. But as far as governments are concerned, gold used to be 6 to 8% of the Indian reserve, their foreign reserves. It's gone up to 14% now. So
wow.
they're actively increasing their gold, reducing their dollar percentage in their reserve, in their foreign reserve. China, they were they were 5 to 6% in late 2024, and now they're up to 10%. So 10%. So China are actively every year they're increasing their gold as part of the reserve. And again, I feel there's no indication from the government if this is going to happen, but I feel that what's going on in the world with Venezuela, with I guess with the Middle East, and now threats against Cuba. I don't think they really want to be tied too heavily to the dollar, and I think they're probably going to accelerate their switch to gold. I think all of this stuff probably made gold take that huge big bounce between August and January from 3250 up to 5500. I think it got slightly ahead of itself. The demand from a few different sectors jumped in at the same time and dragged it up quite fast, and it's corrected a bit from that. But if we stay here for a little bit longer, I can see it drifting up at quite a decent pace for the next 2 to 3 years. I can't
The
see anything that's going to slow it down.
the Chinese have been buying it for at least 10 years now. So all they're doing is just
Yeah,
averaging in. They've been
yeah.
they've been they've been getting it at less than $2,000 per, and so all they're doing is averaging in. There, do you think the value, or do you think the price of gold is ever going to change to any other currency but the US dollar? Or is it is that could be the object of the Chinese and Indians maybe as part of the BRICS?
Oh, what do you mean? Is it well? I mean, it doesn't matter what it's quoted in. It's quoted in euros or dollars. Dollars is
Yeah,
handy because it's the most dominant currency in the world. If you call it euros, the price has still gone up.
yeah.
Not by as much, obviously, because the dollar has been hit in the last 24 months. Uh,
So, but that's the point. Then is it kind of like, is it a trade to try and, because the dollar is getting hit, that they're buying it in US dollars, but they're probably going to maybe sell it again soon in different currency or something like that because they don't
I
want the
I don't think that
dollars.
I don't think they're buying it in US dollars. I think rather than buying US dollars or treasury bonds from the US, I think they're switching some of that money into buying gold direct, and they're probably just paying native currency for it. You know,
Okay. Okay.
I
I was looking.
but
Oh yeah. Sorry. Go on. Yeah.
I was going to, sorry, again, the second driver, again, that's on the supply side. Sorry, that's on the demand side. Again, central banks, jewelry, India, China, and the likelihood is that's going to continue. The other side to gold is obviously the supply side. Now, the cost of producing gold, about 50% of the overall cost of producing gold comes from the cost of energy. So with the Middle East crisis and the price of energy going up so much, the price of producing gold, 1 ounce of gold goes up as well. It goes up with it. Now, I believe the average prior to the Gulf crisis, I believe the average price of producing gold is about $1,500 an ounce,
So that's just getting it
which is
out of the ground and
yeah,
cleaned up and
the cost of labor, energy, everything
right.
added together, the machinery that goes around that.
Okay.
But also, obviously, some mines can do it very cheaply because they got good ore concentration in the ground. Some are very expensive. Some will operate. Some mines will cost maybe $500, $600 to get an ounce out of the ground. Some will cost $3,000 to get out of the ground. What happens though when the price of oil goes up and the price of energy goes up this much? As I say, it represents about 50% of the cost for these people. Uh, a lot of these marginal operations will shut down. So the actual supply of gold will drop as well. So on the demand side, geopolitically, you've got the demand for gold going up from China, India, and
Okay.
then the supply side because of the long-term effect of an energy price increase is that less gold will be produced. Uh, the demand from data centers, China, India, other countries like that, I don't see that disappearing. So I think the demand will increase and the supply will reduce, which I think over the next 24 months will lead to a slow grind up in the price of gold. I would expect it to reasonably outperform inflation by quite a bit.
Okay,
Anyway,
well, yeah, that's cool. I was also looking at what pension funds are doing, and pension funds traditionally goes around 1%, but they are starting to raise it. Now they'll probably never go higher than 3%, but they're starting to raise gold in their pension funds as a part allocation, which I thought was quite interesting. So whether they're getting on the back of this trade or something like that. Again, it could be another demand pusher. I don't know what you think of that, Jeff, but it's possible. Or
Yeah, I heard of somebody was telling me that they were selling a lot of gold. Actually, was it the end of last year or beginning of this year to balance out the portfolio? They have to bring it back in line with what the mandate says. So yeah, I mean, I'm sure they could increase like why not increase from 1 to 3%, right? Or it
yeah,
doesn't have to be gold. It could be a few other precious metals around that area. If you 1 or 3%, it's not huge, Phil.
yeah.
Like,
Well,
it's not
just
like you're
to
talking 60% stocks versus
sure,
whatever.
20%
But
bonds. So
always good to have. Yeah, it's
yeah,
always kind of good to have some probably gold
I
there. Sorry, obviously, even at these levels, whether it's going to go up or down from here.
hmm,
If you're looking 10, 15, 20 years down the line, you
yeah.
put 3% of whatever savings into, or 10% or 5%, whatever it is, into gold and silver. It's probably fine as well, right?
Well, history's told us that you can't go wrong.
Hmm.
I
I
would
guess
just
it's
yeah,
interesting.
yeah. Sorry, go on, John. Yeah.
So I was going to say, I guess it's interesting to look at to step back a little bit from gold and say exactly what it is and where it comes from. Uh, I mean, at the moment, there's estimated to be about 220,000 tons of gold to have been mined and still in circulation around the world. Half of it's in jewelry, uh, uh, and about 25% is in coins and bars, and then another chunk in different places. But
I'd say I'd say quite a bit of it is at the bottom of the sea, to be honest, because
I was gonna
yes,
say, Spanish doubloons, have they?
Spanish and
I
World War
don't think they're
Two,
included.
Yeah, that
World War. Two.
now we're talking interesting stuff.
Okay,
Now we're talking.
yeah,
Well,
Yeah.
the other ones, there's central banks account for about 18% of where gold is as well. So again, jewelry, followed by coins and bars, followed by central banks, followed by industrial materials. And that's where all the gold in the world lies at the moment. The countries that produce it, China's number one, followed by Russia, followed by Australia, followed by Canada.
China's number one.
Uh, it's number
Wow,
one, yeah, produce about
wow.
380 tons a year.
God, I wouldn't have guessed that
Uh,
at all. Wow.
Mm.
Total value of
I
gold in
guess so. No.
circulation in the world, based on a price of say, I don't know, where's it now 4,750. The total value of gold in the world today is estimated about 33 trillion US dollars. Uh, so it's not, and they're producing about 3,500 tons a year, and
Hmm.
which is about 1.5% is being added to the stock every year. So it's not a huge amount of money, every year coming into the market, and it is getting soaked up by the central banks more so than ever, by countries like India more so than ever, and a big driver again, and likely to increase is industrial use, in
Okay.
particular with AI and data centers.
Okay, look, we only have a few minutes left. I just want to quickly finish off with what's called the gold silver ratio. It's called God's ratio. Throughout the entirety of history, up to about 1990 or 95, gold was 10 times more expensive than silver. It went up to a ratio of about 120, 130. It's now around 64. It tells us two things from a historical point of view. Either it tells us gold is too expensive or silver is too cheap. But I think that is gone now because of what you were talking about in terms of the uses, John, in terms of what
Yeah,
gold is needed.
I think it has because central banks can't buy and store silver. It's
Mm,
too bulky. A pocket full of gold is worth a truck full of silver.
yeah.
So silver isn't, you want to get a couple of billion quid of silver. You're talking about filling football fields. It,
There was a
it's it's no
famous
good for central banks.
there was a famous trade in the 70s done by a group or by two guys called the Hunt brothers, and they tried to corner the silver market. And they started buying up a load of silver, but what they forgot to take into account was storage, and they went
Yeah,
bust. Storage was
yeah. Well,
just
it
yeah,
happens. Well, the other thing about that ratio as well is the industrial use for silver and the industrial use for gold. Uh, Gold is it can be drawn very fine. It's absolutely perfect for the AI revolution that's going on at the moment. Silver, it's used in solar panels, that kind of stuff, but
right,
that's kind of it. It's
yeah,
kind of low value stuff. Uh, so I guess from the point of view of central banks and AI demand, and probably the tradition of buying gold in India, which is again accounts for 25 to 30% of the jewelry demand every year for gold. I kind of feel like that ratio is going to expand a bit. It's going to go out again
okay,
over
okay.
over the
Look,
next 10 to 20 years.
all right, we're going to wrap it up there. Quick question to you: would you two consider buying gold as part of your portfolio, or is it something that you need to do more research and it's not something you're doing at the moment? Just for our listeners to be aware, whether you're taking a
Jeff,
whether you're
Yeah, I'm
taking
not
a
like vertical looking for it, you know.
okay.
Yukon, I don't know. Yeah,
you
Central
out with your
America,
metal detector
Yukon,
up in the out in
Canada.
the met.
Mm.
Okay.
I was
Yeah,
thinking out
no,
with your
I
metal
think,
detector up
yeah,
the
and I
Dublin
think, yeah, it's
Mountains.
probably a good idea to have some like, but again, we talked before about balanced
Five
portfolio, so you
five
know,
percent.
yeah, but whatever, but if whatever it is, a balanced portfolio,
Yeah.
Yeah.
Okay.
depends what
John,
other.
would you consider buying it,
Sorry, I was going
John?
to say, yeah, I am, but again, I think gold is just going to trend higher, so I'm
Yeah.
looking for dips, and they'll be my chances to buy it.
Okay.
I'll be hoping to make 10 to 20% a year in it if I do buy it,
Okay.
but I'll only be buying it in dips. And then
Okay.
if it takes wild jumps like it did between August and January of this year,
Hmm.
then I'll be selling it out and looking for dips again to get back into it.
Okay. So, will you make the channel aware of when you do buy it, so at least people can know that
I will.
you're
I actually I think if the energy prices stay high, stay elevated, it's behaved in a funny way to what's going on in the Middle East. It's done the opposite of what I would have expected long term. So the short term move has been just sell it quickly on crisis. But the real thing there is the cost of production is going up massively, so supply will drop, which will lead to a long-term increase in price. So if the Gulf crisis continues and escalates in the next few weeks, and the price of gold drops in the back of that, then I will definitely be buying it.
okay. Okay. We got to wrap it up there, guys. Good job, and listen. We'll chat to you next
Okay.
week, right?
Okay, thanks guys. Enjoy Spain,
Cheers.
enjoy Portugal, and
Yeah,
Cheers.
there's a storm going on in Dublin at the moment.
Let it be. Okay. Well, take care. See
Okay,
you guys.
take care guys. Later.
Bye.
Bye.